we had Warren Mosler on the other day, and he was talking about modern monetary theory. How does this fit into your view of how to correct the markets, how to correct our current economic situations? Can you just kind of break it down for our viewers?
The essence of modern monetary theory is now that we're not on gold anymore, the government can simply create money just like the Federal Reserve has created quantitative easing. It just prints the money electronically. It doesn't have to tax. That's what makes the American economy so much better and freer than the European economy. Europe doesn't have a central bank to essentially create the money to help its economies recover. The American economy has the Federal Reserve, and that can create enough money to spur recovery. The question is this money that the Federal Reserve is going to create, like the $13 trillion that it's given to the banks, going to help the banks recover? Or is it going to help the economy recover? Well, President Obama says we can give $13 trillion to the banks, but in 40 years, we're going to have to spend $1 trillion for Social Security. That's awful. We can only give money to my campaign contributors on Wall Street, not a penny to the voters who elected me, not a penny to the economy. Now, Warren Mosler wants the government to create this money to spend into the economy, to recover employment, to spend on the real economy. But the Federal Reserve says, well, we're modern monetary theorists in a way. We are going to create the money like you want, Mr. Mosler, but we're only going to give it to our campaign contributors. We're only going to give the money we can create to the banks to buy their mortgages. We're not going to help the economy buy goods and services. We're not going to help raise living standards. We're only going to help the banks avoid losses because we at the Federal Reserve have our clients, that's the banks who own this, and we're run by the banks, independent from democratic control.
That was my interview with Michael Hudson, president of the Institute for the Study of Long-Term Trend Economics and author of Bubble and Beyond.